Good afternoon and welcome to another episode of Talking Business with ICAB. ICAB is a professional organization representing approximately 1,150 chartered accountants in Barbados, along with approximately 900 students pursuing professional accounting qualifications. Some of our members work in traditional roles in finance and accounting and are part of teams who maintain the books and records of an organization and prepare financial statements. Some of our members work in audit firms, large and small, and conduct audits of financial statements. More and more, some of our members are broadening their scope on the types of careers they are pursuing and moving away from pure accounting and auditing roles. We'll explore these new careers in a subsequent episode. Today, we want to talk about what the auditor does. If you're not an accountant but want to understand what an audit of financial statements involves, here are the key points you should know. An audit is an independent examination of a company's financial statements by a chartered accountant working as a sole practitioner or as a member of an audit firm. The goal is to provide reasonable assurance that the financial statements are free from material misstatement, whether due to fraud or error. A material misstatement is an error that, due to its nature or magnitude, would cause a user or reader of a set of financial statements to alter any decisions or actions it makes based on those financial statements. Materiality is different from company to company and is based on the nature of the organization and its transactions and the actual balances in the financial statements. In Barbados, under the Companies Act, only chartered accountants who hold a practicing certificate to perform audits from ICAB are allowed to audit companies created under the Act. Currently in Barbados, companies whose gross revenue or gross assets exceed 4 million Barbados dollars are required to be audited under the Companies Act. Typically, the audit covers the core financial statements, the balance sheet, the statement of comprehensive income, or in our case, sometimes it's just the income statement, the cash flow statement, and the statement of changes in equity. An audit does not guarantee that the financial statements are perfect or that fraud doesn't exist. Instead, auditors test transactions and balances, and sometimes those tests are based on samples or on the entire population of transactions, and that is facilitated in the modern audit using data and technology. Auditors also will examine internal controls within an organization and assess accounting policies used for transactions. At the end of an audit, the auditor issues an opinion on whether the financial statements are presented fairly in accordance with the specific accounting framework, which in Barbados is International Financial Reporting Standards, or IFRS. The audit report includes the auditor's opinion, and some of the types of audit reports include unqualified or clean opinions, and most companies would aspire to have a clean opinion because their financial statements are then represented to be fairly presented. There's also the qualified opinion, and that means that everything is generally okay with exceptions, but those exceptions are clearly acknowledged in the audit report for the reader to see. There is the adverse opinion, which means that the financial statements are misleading in the context of the framework used to prepare them, and ultimately the disclaimer, which means that the auditor was not able to obtain sufficient evidence to make an audit opinion. An audit is not a guarantee of future performance of a company, nor is it a detection tool for all fraud. An audit is not an evaluation of a business strategy or of the competence of management of a company. But why would an audit matter to non-accountants? Investors and lenders use audited financial statements to make informed decisions. If you're over the audit threshold previously mentioned for Barbadian companies, banks and credit unions usually include in the covenants associated with the loan a requirement for the company to submit audited financial statements by a certain time frame after the year end. Owners of private companies get assurance from audits because they're not involved in the day-to-day activities, and it provides for them assurance about the accuracy of the financial reporting. Regulators like the Financial Services Commission and the Central Bank of Barbados require insurance companies, mutual funds, credit unions, and banks to submit audited financial statements. The regulators use the audited information in their assessment of the companies as required by law. Shareholders of companies also prefer to have audits because it provides transparency and assurance on representations made by management in their financial statements. Finally, state-owned enterprises, or SOEs, and central government are required by law to be audited annually. With the exception of some SOEs, the audits of these public sector organizations are audited by the Auditor General and the team in the Barbados Audit Office. These audits provide assurance to Barbadians on the use of public funds. If you're interacting with auditors or using audited financial statements, understanding these basics helps you ask the right questions and interpret the information more effectively. My name is Lisa Padmore, and this has been Talking Business with ICAB.